afternoon, everyone. Thanks for joining us today. We have a Q&A with Goodnatured. CEO Paul Antoniadis is here with me. Before we get started, a couple things. As always, this will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's website on their presentation. And there will be a significant Q&A period led by me. But if you have any questions, please feel free to input them in the Q&A box and we'll get to those as well. And the reason we're doing it this way is because Paul's done a bunch of recent webinars going over the full story. So I would direct anyone that's new to Goodnatured to maybe check out one of those, because this will really be more of an update in a Q&A, just to keep it a bit fresh. I think you did a webinar 2 weeks ago, Paul.
We did, and all of our webinars are live. Just like there's some chatter online, they are live webinars, so not pre-recorded.
Yeah, believe me, if I was doing pre-recorded webinars, they'd be a lot better than the ones I do. Anyway, so for everyone that's new to the story, this is Paul Antoniadis, CEO of Goodnatured. Maybe, Paul, you could start off with just a bit of background on yourself and the company.
Yeah, sure. So my background is from the retail industry. Many of you have heard me. Pretty much grew up with Best Buy as they were emerging out of the Midwest. And so I held a lot of different roles there. And we really use this retail business model as kind of the backbone of how we designed Goodnatured. So a little bit about Goodnatured. Our North Star is to become North America's leading earth-friendly product company. And we're deploying a retail strategy called Product Authority, which is we want to become the one-stop shop for all your plant-based product needs, whether you're a consumer or a business owner. We want you to use Goodnatured products as an alternative to the fossil fuel products you're using in your home and to run your business. So by pulling this one-stop shop for all your plant-based needs, we're really attacking an unmet need in the market by making it easy and affordable for consumers and businesses to start switching away from petroleum products. So we're off to a pretty good start. We've got 400 products across 5 business groups, serving now well over 800 reoccurring B2B customers, and we transact with tens of thousands of consumers directly through our e-com sites and third-party sites like Amazon. So a lot of momentum in our business.
Maybe you could go into some of the different products and materials you use.
Yeah, so we basically set up our choice or our product authority around the range of materials we use. So we have what we call our fiber products, which I'm sure many of you are familiar with, whether you get a cup of coffee and a lid. It's really centered around the kind of food service space. We really focus on making sure that these fiber products are free of any hazardous chemicals of concerns to human health and the environment. And then we have what we call our bioplastic materials, which are literally identical to fossil fuel from a chemistry perspective. And those materials are of interest to customers who are saying, hey, look, I don't want to contaminate downstream the petroleum recycling. And so bioplastics can commingle downstream 100%. And then we have our biodegradable, which is our industrial compostable materials. Now, the products that we produce out of them, we'll start with packaging, can be made out of bioplastics and can be made out of biodegradables. And sometimes our food services have lids, like I talked about coffee cup lids, that could be made out of a bioplastic, it could be made out of a biodegradable. So we give that choice from a material perspective in our packaging. And our packaging covers like food packaging, medical packaging, food services, kind of this general merchandise, industrial packaging. So, and then we have our industrial group, which is like, if you think about, we sell truckloads and truckloads of roll stock to other thermoformers, and then they stamp out their own plant-based packaging and they brand it under their own brand. And then we have our general merchandise, which includes our recently announced plant-based freezer bags, zipper sandwich bags, and trash bags. We call them bin liners. And then we have our services and then our commercial business supplies. And then those products, some are just made purely out of bioplastics. Some of those business groups have bioplastics, biodegradables, and like our packaging and fiber. So we use those different materials depending on the application within each of the business groups.
Okay. Anyone that is interested in the differences between those, I'd direct you to the website. You do a good job breaking down the different materials.
Yeah, that's good.
Um, yeah, and so you talk about all these different products and materials. Why is diversity such a core part of your strategy? And I guess the second part of that is why is choice so important to your customers?
Yeah, well, I mean, it first starts with a lot of our customers have never seen plant-based materials, and the fact that they have a supplier as an option that can bring a range of products for them to use that's stocked, or the capability to help them design a product specific to their needs using these different materials, it really wins the customer over because it saves them a lot of time. It makes them easy. It makes it easy for them because they don't have to go out and do all this research, and they don't have to go out and figure out, well, I can get this one product from this potential supplier, or I can't find this product. I actually am working with a supplier called Goodnatured, who's leading the industry in plant-based products. And if they don't have it, they actually can design it and make it for them. So it creates this level of ease. And then on top of that, we when we engage the customer, we really take the time to understand their needs and to make that material choice, to make that packaging design. And then we may start with that customer with, say, 3 products of their 20 available. And then as we build that commercial trust and supply chain stability and we're servicing them, that opens up the door for us to cross-sell additional products into that customer. And our target internally is to gain the largest share of wallet of their sustainable spend. So, and it just makes it easy for them to say, okay, now I started with 5, I can go to 8. Now next year I can go to 12. Or, hey, we're thinking about designing this new food product. Can you help us figure out what the right packaging is? And not only can you get the packaging, they can get the labels, they can get the pallet stretch wrap. So we begin to provide a lot of products across their value pools, that their product applications that they use in their business. And they like that. And it's being really well received in the market. It's no different than if you go shopping, right? If you're going to go shopping, whether it's groceries or TVs, you want to go somewhere that's going to have a range of choice to pick from, right? You're not going to go out and go to 100 different stores and look for a pair of shoes. You're really wanting someone that's going to give you a good range to pick from, a good amount of choice to choose from. And that's a winning concept in retail, whether it's Home Depot, Amazon, Best Buy. That's one of their keys to success.
Makes sense. You touched on it earlier, but can you talk a little bit more about your North Star and how this guides your corporate culture? And I guess how important do you view corporate culture and how do you maintain it while growing so quickly?
Yeah, well, being good natured is fundamental to not only the way we identify and bring people on into the organization, but we also, it's how we engage with our partners, it's how we engage with our customers. We want to make sure that we're taking this good-natured approach in providing them choices and options. A lot of our customers, this is all new to them. They haven't seen plant-based, and we want to take a collaborative approach in showcasing our services and products to them. And that extends into the companies that we look to acquire, right? So if we're out there, targeting a plant-based company or a petroleum-based company, we want to make sure that it's good. They represent the good-natured characteristics, right? They're got a lot of energy. They're unconventional. They're very purposeful on how they operate their businesses. So we make sure that the cultural match in these acquisitions is really close to the good natured culture, and that fundamentally underpins our strategy, right? Which is our North Star. Is like, well, we want our people to have the energy to support our growth company, and our North Star is to become North America's leading plant-based product company. And we position ourselves in the public markets as a growth company, and we want to make sure what we say is actually what we do, and that fundamentally gets executed, whether it's on the acquisition side or whether it's on the organic side, by our people. And our people are a big driving force of our success, along with our partners. We've got some killer partners in our business. and they bring a lot of energy and capability into our supply chain. And it takes a team effort to build a $1 billion business, and I think we've got some good foundation as we continue to execute over the next several years. So I feel real confident in the group of people we've pulled together.
I think culture is so important. As someone that's an entrepreneur myself, it's really, really important to growing a team, to keeping that culture consistent. So it's impressive that you've been able to do it with so much organic growth, so much growth by acquisition. I think in the last 2 years, you've made 3 acquisitions in total. Is that correct?
You did. Yep.
Well, that's a phenomenal amount of growth over the last several years. And that award that you received from Deloitte recently is certainly proof of that. Can you talk about that process, the growth process, the award, and how the company's changed and not changed since inception? And I'm going to rudely step away because apparently my computer is not plugged in. So I'm just going to go through this.
Okay. Well, this just validates whole live. So this is fantastic. No, I think, fundamentally, on the call, I'm sure we have some owners, along with some folks that may be new to Good Natured. And I think that the very first position we take with all of our owners is we're a growth company. We're a growth company in the sustainable ESG space. And it's fantastic to be recognized by Deloitte and confirmed our position in the public markets as being one of the fastest clean tech growth companies in North America, right? We're in top 50 in the clean tech fast, and then obviously we're part of the top 500. Now, what's unique about our growth strategy is it's got multiple levers, right? We're not dependent on one customer. We're not dependent on one product line. We're not, our model really is, our growth model is really designed, the more customers you put into it that are diverse customers, the more diverse products you put into it, the stronger our model becomes, the more formidable competitor we become, and the more delightful we become to our customers. Now, we pull on 4 big growth levers, right? So organic holds 3 of them. We go out and grab our, net new customers. We have a very robust customer acquisition strategy. It's designed around a retail concept. If you look back in, 2020 of we were around 400 customers or so, or 250 at the beginning of the year, and now we're have around 800 active customers, so more than 800. So that's a good indication of us going out and acquiring new customers. And once we acquire them, we want to sell them more products, like I was mentioning earlier. So once you acquire them and you build that trust and confidence, we may do some more custom projects to them. We may sell them our plant-based pallet stretch wrap. They go online and buy food services, and they put it inside their manufacturing facilities and their cafeterias. And it's crazy how our products then begin to extend across an acquired customer. And that extension isn't a start-stop. Like some, we get all their customer, we basically acquire the customer and we get all their products. But sometimes we start with 3 of 20 or 5 of 500. And what we want to do at the pace that the customer, obviously we're encouraging them to begin to gain more and more and more of their business. And then we launch new products. So this is the third organic. So it's new customers, cross-sell, and we launch new products. And we launched our zipper products. You should go on, I don't know if you've been on Amazon, you can buy them on Amazon. They're in retail storefronts. They're fantastic, right? They're high volume, sandwich bags, freezer bags, trash bags, so we're entering, we're really concentrating on pushing these new products into the kitchen to complement the food packaging that's being sold to grocery chains. And then lastly is our acquisition, right? So that's our 4th big one. And we want half of our growth to come from acquisitions and half of our growth to come organically. Now, look, a lot of people talk about this. We've done it. And a lot of people say, well, can I continue to do it? And I'm like, well, listen, I've heard that a lot. The best way to predict the future is to look to the past. And, I get a lot of questions around, hey, organic growth. Like, are you guys really growing organically? Because we only issue those numbers at year end, right? Because of timing and the way we onboard. I don't want a really good quarter to say, hey, that quarter is going to be the same the next quarter because we may have pulled some business forward or whatever. But we just landed a U.S. food producer that, it's equivalent on a yearly basis of 13 million US. I mean, that is as big as the IPF acquisition. So our cylinders of growth are hitting, and I am never been more optimistic and more excited about the future growth opportunity in this company. And whether you look at that U.S. food producer or you look at our recent X-Tech acquisition, that was about 33 million on a TTM basis in 2020. There we have layered on a lot of growth in a very short period of time, which mirrors our culture, right? Our culture is a growth company culture that centers on good-natured behavior, being energized, purposeful, unconventional. So in the way we operate our business, and I think our prior success should be an indication of our future performance.
For sure. Since you're on the subject of acquisitions, can you remind us of what you look for in acquisition targets and whether this has changed over the years?
It does change over the years, right? So I think fundamentally the characteristics we look for is either a plant-based or a petroleum-based company that's got a lot of customers. So again, we love lots of customers because it feeds into the model. They got to have a lot of products that either complement our current lines or open up potentially new departments or new business groups or new categories, because we want that product authority, right? And then if the petroleum, we intend over time to convert all their customers and products to a plant-based alternative. Now we want these companies to be EBITDA positive, right? We don't want to be acquiring companies that we're having to pitch ourselves out of a negative cash situation. And they have to complement our supply chains. And I'll talk about how it's going to change. Our recent acquisition of X-Tech complemented IPF. That really strengthened our industrial business group, which basically creates that roll stock that we use in our packaging. And we also sell that commercially to third-party thermoformers. I don't think we're going to do another industrial roll stock acquisition. We've kind of anchored that as a leading indicator of supporting our packaging business, but also supporting our commercial roll stock business. And what we're doing now in that industrial group is we're not going to, in the short term, apply our acquisition strategy, and then we're kind of done. And now what we're looking for is adding capacity, like our high-speed robotics. Like we're really looking at IPF. We put this high-speed, robotic capability where we're trying to, put more output on an hourly basis on the same cost structure. And that capability is about 100 million pounds roughly after completing the install of this high-speed machine at IPF. Now what's changed is we want to leverage off of that, and obviously it's a leading indicator for our packaging, because packaging and general merchandise is our primary business units. And I foresee our acquisitions really being aimed towards, packaging or general merchandise or services, to balance the mix right now, because obviously with two acquisitions in the industrial business group, we've over-indexed in our revenue mix in that business group. And now we want to balance it by not only doing it through acquisitions, but with our organic efforts, like the large US food producers, a packaging customer, that will add more revenue into the packaging business group. So, it will change. We may, like we said, we're done with industrial, and we're now re-aiming it to other groups, but we may enter into another business group that's been undefined publicly. So, I think the principles are the same, but what's changing is where we aim our acquisition efforts. Is probably where I would say to the listeners that's what's going to change.
And have recent inflationary pressures affected your acquisition strategy or impacted it either positively or negatively?
Well, I think it's actually been positive, right? We have a very active acquisition pipeline. And I think just like with COVID or these, global supply chain disruptions, and it's not just inflation, right? There's a lot of supply chain disruptions at port, moving goods around. And so a lot of these privately held family-owned businesses are, some of them are owned by family members that are, in their early 70s, and they're maybe multi-generational, that they're looking at this saying, hey, maybe this is a good time for us to consider selling our business. And I think for us, what we want is to be that company that they come to, because we're good natured. And, a lot of these family companies have been in business for, 20 years, 30 years, some as long as 50 years. They've got folks that have worked there for 20 plus years. And we want, if they're interested in selling the business, we want to give them confidence that they're joining a culture, going back to your first point, that embraces people. It's focused on creating, value for our owners, but at the same token, career opportunities for them to advance their career inside Good Natured. And I think what I am seeing now is more companies approaching us, or third parties that are representing businesses approaching us, because we can reference Shepherd's, we can reference IPF, we can reference X-Tech, and say, go talk to those, those owners that are still working here, and they'll tell you what it's like working at Good Natured, unfiltered. And I think we're gaining that reputation as being a great place to integrate and come to as potentially being acquired, because the integration is culturally is a good fit.
We talked about inflationary concerns. Another concern is supply chain constraints.
Sure.
Have you been impacted either positively or negatively by supply chain constraints? And I guess one that's about to hit us right now in BC.
Well, I would say it's been positive and challenging, right? So the challenging side is everyone's impacted by the port of entry, and everyone's impacted on gas prices, and everyone's impacted on driver shortages. And so what we've done is we've proactively positioned our inventories. We've proactively prioritized servicing our customers and making sure that we minimize their disruption to their business, because the demand in the market is really robust. And that demand is extending into our food producers or food growers. The last thing they want to deal with is an input, like our packaging as an example, disrupting their supply chain. So we're prioritizing serving those customers first and foremost. So if that means that, in a normal circumstance, we're out there kind of bidding out a truck to try to get the lowest cost, we are prioritizing stability of accessing a truck, even if it may be slightly higher, to make sure that customer doesn't experience that. And that may lead to some short-term, inflationary costs that are hitting us, and we've got to pass those costs on to our customers. And sometimes it's quite challenging, because these logistic routes, as an example, it's not just exclusive to logistics. Those routes are moving around and jumping all over the place on a weekly basis, and we may pass a price increase to our customers, which it's actually been unbelievably the resiliency and entrepreneurial spirit out in the business community in handling this inflation. I think everyone was shocked, but now everyone's rallying to working together to make sure that all of our supply chain lines, to the best of all of our abilities, are as stable as possible. Those price increases get passed to them, they accept them, but the costs have gone up, right? So the last thing customers want is a continuous price increase on a weekly basis. So we've worked with them in establishing shipping surcharges in order to keep their pricing maybe in their packaging stable. And then we're adjusting that shipping surcharge maybe on a monthly basis, or in some cases every few weeks, depending on the route. But that's been the challenging side, is these prices I've seen some stabilization, but they've definitely been bouncing around. And in some cases, our pricing has lagged that. But I think for the most part, I'm seeing, acceptance in the supply chain now of the real situation, and price increases are being readily accepted now, where I think in the early stages of this inflation, everybody was shocked. I think now everyone, through all the communication that's happened in the media, realizes the circumstance that everyone's dealing with.
Yeah, not so transitory.
Yeah, I would say that transitory thing, I'm not sure what that exactly means, right? But I don't see any transitory in this. Like, we expect inflation, an inflationary state and prices to continue going into 2022 and maybe even beyond. And that's what we've communicated to our customers. So in the meantime, let's just make sure they don't run out of product, and that's our priority.
Yeah. Have you noticed a difference in passing on price increases to like B2B versus B2C?
I would say B2C and B2C price. I would say I would anchor back to this. Early on, it was a shock. Now, I think in general, consumers, our B2C channel and our B2B, have accepted the challenges in the supply chain and the pricing. And so I think what we're trying to do collectively with our customers is get creative. What can we do to minimize these cost increases? Maybe we ship you more product. Like before, we were, some customers were getting just-in-time shipments out of our warehouse. It could have been maybe 6 pallets or 3 pallets or 12 pallets. We're saying, no, take a truckload. Sometimes we're working with our customers to have them carry more inventory at their locations, and with that, we gain longer lead times, and we're shipping rail to keep their costs down. So I think there's a lot of entrepreneurial spirit out there trying to tackle on these challenges, and the conversations have been really productive with our customers and our suppliers, our partners, because we're just all recognizing that this is just a new reality that we've got to operate our businesses in.
And are you able to lock in supply with feedstock suppliers? And how's that working?
Yeah, we have. So we anticipated this, and we went out and we bought some inventory early in kind of mid fourth quarter last year. It was actually a bit nerve-wracking. Like, we were talking about this, like at the board level, like, how much do we want to buy? It's too much. And we finally said, hey, let's go for it. So we went out and bought it. Now I look back and I said I should have bought more because the prices would have been a hell of a lot better. And so, we continue to flex our balance sheet. We've strengthened it, as you know, recently with our recent announcement with National Bank. We're flexing these lines to secure the best pricing we can on these raw inputs. But what's been interesting opportunity for us that during the supply chain, what we're seeing is some customers, potential customers, have gotten trapped to the port of entry because they were importing a lot of their finished goods. And we're seeing a lot of reshoring happening, or customers that are trapped. And so they're looking around for alternatives. And we've been picking up business because of circumstances like that. And that has forced us to go out into the market at these higher prices of inputs than what we bought earlier on. And in some cases, that may mean a little bit shorter term with those customers we acquire, helping them, or we're helping them. We're saying, okay, we're going to help you. We're going to maybe accept some lower margins, but as we integrate you into our supply chain, we're either going to pass on these price increases to you, or we're able to readjust the costing to get back into kind of our historical, variable and gross margin rates. So I think it's been really interesting because this, going back to kind of your earlier question, like this supply chain disruption has opened up a lot of new organic growth to us, because some of these potential customers have trapped themselves, or the supply chain disruptions have trapped them. And what we're seeing is existing customers on certain products that maybe they got trapped on, are giving us more business, and we're seeing new customers coming in, exploring the opportunity to work with Good Natured, and that's actually helping us because it's accelerating the transition. They're like, yeah, we'll switch to plant-based, and so that's actually helped us convert customers away from petroleum too. So
that was going to be my follow-up question. These customers that you're finding that are having supply chain issues, they're mostly petroleum-based products that they're using, or are they some sustainable? Were you capturing both?
Yeah, both. Yeah, we're seeing both. We had one what we call is they're like a sustainable e-com food service company. They're a great group based out of the U.S. and we had a handful of products that they were selling quite successfully with, and then they were importing some products in some food service areas, and they got trapped, and we picked up all that business from them, and from that supplier that they used to purchase from. And we've also seen petroleum companies. What's happened is these very large multinationals, multi-billion dollars, everyone's in this same situation. So they're directing their supplies to their top customers, obviously, spirit of servicing them. And that's causing some of the regional enterprises to get shorted. And we've had some food service producers, or I should say food producers and grocery chains reach out to regional grocery chains and regional food producers reach out to us because they've been shorted. And those were petroleum, and we've converted them over to a plant-based alternative. So I think this disruption's actually, we're going to benefit from it in the long run. I mean, the next couple of years, because of the way we're out there serving our customers and helping customers potential customers that are trapped. I think we're going to truly benefit and come out of or go into next year with some strong momentum based off what I'm seeing.
That's great. Well, I know a lot of companies and industries are experiencing that increase in input costs, but petroleum-based packaging must be extremely challenged right now with the disproportionate increase in oil prices. Is this helping you gain customers in terms of switching?
I would say it's not 100% tied to the increase in petroleum. I would say it's really tied to the macro demand of interest. So this COVID has heightened the orientation towards health and wellness. It's heightened the orientation on finding, better solutions out there for human health. And we're seeing that demand continue. So the macro picture is still really strong on people are looking for healthier products to use in their homes and their businesses that are healthier to them, humans, and healthier for the environment. I think the global supply chain disruption has played a bigger role as folks are looking into the new year going, how do we de-risk our supply chain? What else is out there? And they're out there and they're saying, oh my God, there's a plant-based option. And they have a domestic supply chain. I think that's playing a bigger role than the increase in petroleum pricing.
Makes sense. If you're going to have to switch anyway, why not switch to something that's good for the environment, good for your body, and more sustainable?
Exactly.
So going back to something you referenced earlier, so you recently completed a successful convertible debenture offering and credit facility. How does this position the company in terms of debt service, cap structure, strategy, and growth?
Yeah, I mean, first and foremost, once we setting up this credit facility with National Bank is a great indication of the direction the company is going. Like National Bank clearly did their due diligence on us. They're, for folks that aren't from Canada, they're, one of the, top 5 banks here. And getting these credit facilities are really important to us because, we are continuing to grow our business, and we want to use these credit lines to buy our inventories, make our capital investments. And, as we get our receipts in from our customers, we strip those receipts out of the COGS and we pay those lines down, or we park that cash next to the lines that we've drawn down. And that's really important for us in the future. Like, I think as we build our assets now, I think we're well north of $80 million. And, these banks will grow their facilities as we grow, and that deters our need to go to the public markets to raise money on the equity side to support our purchases of our inventories and input costs. So I think that's a real positive development. And the good sign with National Bank, the good thing is they're going to grow with us, and they're committed to growing with us. So they know our ambitions as a growth company. They have backed a growth company. So we're pretty excited about that. So as we size our company up, they're going to be there for us. And obviously we complemented that with a convertible note, and we did that because we had some expensive term debt on our balance sheet, and between the interest payments and the principal payments, we deferred by restructuring all this. It's going to, again, I'm doing this, I think it's roughly $8 million of cash. We're redirecting into growth because of deploying this convertible debenture. So we think it was a good move for us. It did not increase our asset to liability ratio is at 1.4, and I think going into it was roughly the same. So I get that question a lot, like, hey, you putting more debt on your balance sheet? And the answer is post this transaction, the answer is no. We look at that asset to liability ratio quite closely, and these credit facilities, you got to remember the intentions are to strip the cogs out and pay those things down and bounce those credit lines, back and forth. It does, just because we get a $15 million credit line or a $20 million credit line, doesn't mean we've drawn it all down. So I think that's the other consideration when owners are looking at our debt is, we haven't drawn all of our credit line down. So.
In conjunction with this financing, you signed an agreement with a large US food producer. Can you quantify this contract in terms of annual revenue growth potential?
Yeah, this is a huge thing. Like, I think this is like one of the most unrecognized in the value, our share price, which is like we just acquired a large US national food producer that on an annual basis will generate around 13 million US. 13 million US, if you convert it to Canadian dollars for our Canadian folks on the call, that's roughly, call it, I don't know, what is that, about 16, 17 million dollars Canadian. That's equal to the IPF acquisition that I mentioned earlier. I mean, that's our single largest organic customer. That's equal to the size of an acquisition. And for all those folks out there that keep sending me and Spencer emails on organic growth, there you go. I think that one's the answer to all those inbound emails. Organic growth is robust, let's just say.
So would you expect this contract to grow over time? Do you have any guidance on that?
Well, we're formalizing that contract, and the short answer to that is we expect to enter into a formal agreement. There's nothing that's going to inhibit it, and that revenue that we share does not represent the full potential of that customer. So we're focused on servicing them, just like all of our customers now, and let's get the program rocking and rolling and stabilize and, getting the routes going, and then we'll look to expand the relationship. But I think right now they're anxious to give us more business, and we've just said, hey, listen, let's just get this program up off its feet and a contract buttoned up, and then we can expand it. So I think it's a very promising announcement, along with the tech growers. Like, we've announced the tech growers and meal kit. There's a lot of exciting activity, diverse activity around our organic initiatives, and I think everyone should feel really good about it. For all the owners on here, like, despite these challenges, our growth remains quite strong, and we're hitting on all those levers, those growth levers. So I feel really good about it.
I definitely want to get into into new products, but I have a couple more questions
Sure.
about this large US food producer. So, do you have any idea what a company of their size would spend on an annual basis on packaging? Like, what proportion do you think you are of that particular customer's packaging?
Well, I can't disclose I can't disclose that because of under our non-disclosure agreement with them. But I will tell you, it doesn't represent their full amount. And they're an innovative group, like food producers, when they're competing for business, right? So they're looking for packaging, which we all eat with our eyes first, right? When we go shopping or we're having dinners, like, so we work really hard with them to enhance their product presentation on the retail shelf, or optimize the retail shelf, or get more product out on the retail shelf to help drive more business with them. And that's been a big, not only with them, but I think with many of our customers, is we take that approach with our customers to say, how can we enhance your business? Sometimes that enhancing is just getting them product in this environment. But with them, we're very much focused on getting that program up. And then there's definitely room to grow. And then, you got to remember, they're a national account. National accounts, we have lower margin rates. I've always said that to the group. We want to balance that with some good regional customers. We want to balance that now with some additional small business segment, which the small business segment is absolutely on a tear now that all these COVID restrictions have been eased. And so we're seeing some real robust growth in our small business segment. And that's, they're purchasing online. And so which is great. And that obviously has they pay with the credit card, and obviously there's better margins. So we want to balance a big national transaction, whether it's an acquisition or organic, with a series of regional and small business customers. So I think all in all, I know I've kind of danced around that with the non-disclosure, but we do not have all their business, and there's lots of room to grow it. But we want to successfully execute on it and add additional customers around that. We are not a one customer, one product model. We thrive off of diversity of customer.
Do you think landing this large producer and successfully working with them will contribute to landing other large contracts with other large food producers? And how many large food producers are there in the US that you could go after?
There's quite a few, right? I mean, it's a big economy. I mirror that with Canada. There's a lot of big food producers up here too. So we focus on our national accounts. We focus on our regional accounts. We focus on our small businesses. Packaging is it's $1 trillion business, as I mentioned before on calls. And so there's lots of opportunity for us to go grab these big accounts. But again, I want to kind of tap the brake a bit. Like, this is a huge success for us. But our model is based off of diversity. I think what's really important for all of our listeners, particularly our owners, is this is an historical customer, organic customers in size. I don't believe that's reflected currently in our value, and I don't think it's been recognized, or maybe we failed to communicate, and that's why we're here. Is we need to recognize that is equal to the IPF acquisition, equal. And everyone should be really fired up about it.
I'm fired up about it. Any chance you're going to tell us who it's with?
No.
Didn't think so.
No, we can't, because then we invite all of our competitors to come pick away at us. So,
of course.
The short answer is no.
So let's talk a little bit more about your organic growth strategy and walk us through some of the recent customer wins, new products, and your expansion plans at your various facilities. I mean, you touched on a few of them, but maybe you could talk a little bit about some of the announcements that you've had recently. Certainly some interesting products that you're making.
Yeah. So when we go out to acquire a net new organic customers, we do target our marketing team, our growth team. I call them our chief psychologists. they target what we call customer groups within the grower. We'll just pick growers, right? So in growers, you've got these tech growers, you've got organic growers, and you have your traditional kind of these field growers. So, we go after these tech organic growers, and we of all sizes. There's some that have, on the organic side, small farms that maybe have 20, 30 acres. That they want to naturally extend their efforts on their organic efforts into their packaging. And then we have, these tech growers that we announced here that, are growing product up in the Arctic that, are producing fresh greens yearly, and these hydroponic growing farms. And it's just natural for them to extend that technology effort into our packaging. And also these tech growers are kind of addressing the amount of logistics from the field to the grocery stores, and trying to collapse the time in localizing food growth closer to larger populations. And that reduces the CO2 footprint associated with that leafy green. We're seeing real robust growth in these tech growers. And so we're out there wanting to be the market leader in packaging going into tech growers. And these tech growers are growing year over year in their revenue, which naturally means we're going to grow year over year in revenue. So we're working really hard to tie our packaging to fast growing food segments, or whether it's, in the field or food producers. And we try to tie ourselves, whether they're national accounts or whether they're small business accounts. We want to make sure they're in spaces that they're innovative, they're growing. If they're growing organically, that's going to drive our organic growth. And so we're looking at, I know I've spent a lot of time in tech growers, but we're also looking at, for example, these meal kit, which is meal kit providers is still a very fast growing segment. And we're gaining a lot of traction. Again, small ones and regional ones we're gaining a lot of traction with. So that's part of our success, is integrating our approach on these trends. Now, one trend on small business, for example, are like, I don't know if do you like macaroons? I don't know. I would eat them. Like, if someone presented macaroons, I would eat them, but I don't go out looking for macaroons. But do you like macaroons?
They're fine. I mean, they're for baby showers and things like that. But I know the plastic, it's shaped like a roll where they come in. Is that what you're getting at?
Yeah, like we know these little bite-sized desserts are a fast-growing eating trend, and so we've created this macaroon package, both in a 6-count and larger count, that we're out there promoting online. And there's a lot of home bakers that are making macaroons, small businesses, and macaroon chains. That's all they do. And so we also target eating trends that we design packaging and really try to amplify it through kind of that small business. And small business could be, it's as much as a couple $100,000 a year, or just a case order a month.
Mm-hmm.
So we do also look at these eating trends, and these eating trends are something that we constantly study, design products, stock products, and then go after. So I think that's kind of some of our secret sauce in our organic growth that we don't really speak to very much in our normal presentations, but we've definitely had lots of continued success taking this targeted approach.
I really like your takeout container lines. Those are really cool. How's that business growing?
Yeah, our microwavable takeout container has been a smashing success. Like, the amount of inbound that we're getting on that, again, across all of our segments, has been really good. I had a very large company come and approach us, and they're very interested because it's not only can resist high heats, but it's compostable. And so that's really gained a lot of attraction. Now we have a stock product that you're referencing in that, but we're also getting a lot of inbounds on custom products. So we can design the mold and make a custom product with that material. That material can get applied into different type of food applications. So whether it's food takeout or for food services, to sell small businesses, we've had a lot of demand for that, a lot of interest.
Great. Well, I have a few audience questions, so maybe
Sure.
we just go rapid fire. So one is wondering if your products or your materials could be used for a replacement in for plastics in toys, like Lego, for example. And have you approached any toy manufacturers about using it?
Yeah, there is. The short answer is yes. There is some application to toys. We are currently not in toys. We're really putting our focus in towards detoxifying the kitchen. I think over time, obviously, we're concentrating in the home, but today we're not in toys. But there are applications that our materials could be applied towards toys.
Okay. And I had a question about whether your products are in any major Canadian grocery stores.
Yes.
All of them, some of them?
Well, I was in, where was I shopping? I was in Safeway the other day doing some grocery shopping. I'm always looking at the packaging and stuff. So we enter a lot of the national accounts, national grocery chains through food producers. So it doesn't mean that we're doing business directly with that company, but our packaging is entering through that, and we are in some of our general merchandise in Canada is more in the regional space, and obviously we're selling it online. So we don't at this time we don't have anything in the Canadian retailers with our general merchandise. It's more regional.
Okay. Are there technological advances still to be made with your products, or do you view the plant-based packaging technology as fairly mature?
No, I think it's really in the early stages. I love that question because I'm a technologist coming out of the consumer electronics industry. So I love products and technology. And I really see a couple things. One, we're in the early innings. We're out there offering plant-based PET. We really believe there's continued innovation where there'll be a plant-based alternative for any and all petroleum based applications. And so some of the things that I'm seeing is really exciting. And I think we're in the very, very, very early days. Like I get asked a lot, like, petroleum industry is not going to disappear over time. But I think for good natures, we want to lead that charge with our authority and our choice and our material innovations. And there's a lot more material innovations to come and capacity. There's a lot of investment happening way upstream. And we know them all. We know the big guys. We know the guys that are still in their innovating in their garage or university. And I'm pretty impressed. I also want to highlight outside of the materials, there's lots of innovation in production. With robotics and high-speed equipment, and we're really excited to leverage that technology to continue to drive our affordability in our products. So if we can produce products through the use of high-speed equipment and robotics, that means that we're driving that affordability position in the market, and we're equally excited about that.
Okay, I had one question actually that was really specific, but I remember this from growing up. You know those plastic milk bags? Like you get three in a bigger bag. They go in like a canister thing.
Yeah.
They're clear plastic. Is it possible to make those kinds of bags out of your material? And is anyone doing that?
I think that material is an LDPE. I'm not sure if it's a blend, but the short answer is I have to look at the actual material. If it is an LDPE, the answer is yes. Is anyone doing it? Not that I'm aware of. Are we doing it? The answer is no. I think what's exciting about the material it's widening the applications that we can go after, because as that material, like we're agnostic to the material. Like, we go out in the market and we go to all the farms, I call it. We're like Michelle's our master chef. He goes out to all the farms and looks for the best tasting tomatoes at the most affordable prices. And so as these materials innovate, we're agnostic. We're going to, we may grab a material that's brand new and it may open up a bunch of applications that we've never been able to do with materials. And so for us, it's exciting to know that our applications are buying. In this milk instance, I believe there is an application or material that could apply to that, but we're obviously, not trying to shoot at. I think it's a matter of time. For example, we could go into the milk application. We've gone into pallet stretch wrap. Well, why? Well, when we sell a food producer a package and a label, they're going to pack their food in that package. They're going to label their food that's been placed in our package, and they're going to put it in a box. And once they put it in a box, they're going to label that box, tape that box, and pallet stretch wrap that box and ship it. And so we're trying to target and prioritize value pools that are what we call complementary first. And then as we look at these other applications, I think we put it in our roadmap, and we have a very robust product roadmap. I think we have it out to, we're just finishing up updating our business plan for next year here. We're finalizing it, and we have our roadmap all the way out to 2025 in products. So, so this flexible film application is definitely an area of our interest. And I think pallet stretch wrap and our zipper bags and trash bags is an example of our entry. And it's just a matter of time before we extend. Will we end up in that milk application? Maybe, but not. It's not anything in the near term that we intend to do.
Okay, maybe if a milk producer came to you for a solution.
It's possible.
Yeah. We're just coming up on the hour, and I don't want to
Sure.
monopolize your time. Do you have a few minutes to go over? Or do you have another meeting scheduled?
No. I'm happy to go over.
Right. There's a few more audience questions. So actually, yesterday we had an ag tech conference, and one of the companies that presented was Imaflex, that has a flexible film used in agriculture. I believe they're using resin for it right now. So somebody that obviously attended that conference is asking, is the biodegradable mulch film used in agriculture a product line that's of interest?
Yeah, that's very interesting. So the short answer is, yeah, that's a good compliment because it ties into our food growing segment. We are aware of several companies that are in that plant-based space. So, it's a good example. I'm not trying to say we're doing this, so please don't take this as a forward-looking, hey, they're going to do this. But that's a classic example of a category that we look at and we make those decisions. Do we go about it organically, or do we go out and look to acquire our entry? But we are currently not in that, but we are well aware of all the players. There's a couple players in that space in the US too that are really an impressive group. But we do a lot of business with growers, so there could be some, I don't know the specifics around that company and their application, but we definitely have a broad access to field growers that can apply to. So it's a great example of plant-based applications growing and disrupting these hundreds and hundreds of billion-dollar marketplaces. So, but it's a great flexible film application, and definitely something that's on our radar.
Well, Spencer would know the company because Beacon covers it. A couple more questions. So we talked a little bit about what's going on with your expansion and automation and robotics that are going into some of your facilities. Maybe you could elaborate on that and tell us what your current capacity utilization rate, and how this compares to your maximum utilization rate. And do you have to build extra manufacturing, and how did these upgrades sort of play into that scenario?
Yeah, I mean, there's two big trends feeding into this strategy. One is the level of reshoring that has taken place because of this global supply chain disruption is really accelerating. We're getting a lot of inbounds, which is exciting. And so what we're thinking about is we did our best to anticipate this. We're not perfect, but we did have some sense that something like this was going to fold, not to this degree, but so what we want to do, and the second trend I should say, is around labor and the cost of labor. And all industries now are fighting for labor. I mean, Amazon's opening up warehouses all over the place, and we're all fighting to get the best talented people inside the organization. And so what we want to do is complement our efforts in hiring great people with high-speed equipment and robotics. And you're like, okay, what is exactly that does that mean? I can only speak to what's out in the public domain, but it is broader than what I'm speaking to. So when you look at the high-speed equipment we're putting in IPF, well, first and foremost, that equipment can output, I think right now we're about 800 pounds an hour of finished roll stock. That's the material we're stamping out. This new machine can spit out between 1,800 to 2,000 pounds an hour. So if I'm spending, this is a hypothetical, if there's any analysts in here, don't do any backwards calculations on this and raise our revenue targets. If I'm spending, let's say, $10,000 a day to run an extrusion machine that produces 800 pounds an hour, right? That means in 24, or let's just, call it for simplicity, 1,000 pounds an hour. That means that I could produce 24,000 pounds with that $10,000. But if I take that $10,000 and now I'm producing 2,000 pounds an hour, I'm getting a higher output with that same team, right? That I've invested in to operate that. And we've got some unbelievable operators. We have some really top world-class equipment operators. And so I want to arm them with these high-speed machines because they can put out more on the same cost structure. And that also addresses our lead times and our service levels and supports our demand. And so when you're talking about capacity levels, like that high speed, that I can speak to specifically to the high speed, we've grown our capacity there by 50% with this new line. And so that positions us to support our packaging business growth, like that US food producer. And it also positions us to go out and acquire commercial customers in that space in a more efficient manner. And so what we want to do is not only, we want to extend that high speed into robotics, whether it's, packing our packaging in the boxes and stacking them on the pallets and automating the wrap of that pallet and automating the loading onto the truck. So there's a lot of efficiency that we can build. And the big why behind that is that affordability to our customers, that servicing our customers, right? Cutting down the lead times, pushing down our affordability, because we don't want price to be the inhibitor of people not switching, right? That has to extend into technology, not only inside the operation, but also how we interface with the customer in trying to get them to engage with us through technology versus a manual entry point in placing an order or following up on our order. So there's we've entered a real interesting stage in Good Natured around technology, and we're in the early innings of that, but that is a big part of our future. As much as we talk about materials, I'm equally excited in product design and new products. I'm very, very excited about what we're doing with robotic, high speed, and technology platforms inside the company.
And the goal with that is all the things you said, but also an increase in margin down the road?
Well, I think it's more about, obviously we're going to be yielding more. So you're absolutely right. We'll be in a position to choose. Do we pass that into our margin lines, or do we pass that all into our affordability, or do we do a combination of both? Irrespective, as we size up our company into a new fighting weight, meaning revenue weight, our competitors will change and become more fierce. So we're conditioning ourselves for that fight. And I feel like we've taken some steps and we've announced some steps to do that. And more importantly, we want to do this to help to drive that affordability and service our customers. And that obviously will make us more competitive against our competitors.
And it's in line with your North Star and being good natured. I get it. After 4 sessions, Paul, I finally figured out the company. So a couple more questions.
Sure.
One of the audience members was wondering what your biggest concerns for the next 12 months are.
Well, I mean, I wake up every day to that North Star, right? So I worry about executing that and executing it within the market conditions that present themselves, right? So I think, if you look at our ability to execute our North Star, this is what I worry about every day as an owner, and how we create value is through growth. We're a growth company. We got to deliver that. And I got to tell you, we have had a unbelievable couple of years here. I think collectively as a community of people, like business community or communities you live in, like look at COVID, look at the curveball COVID threw at us in the beginning and continues to throw at us with these variants. And the resiliency, not only in our communities, but look at our business, our team, and how they delivered an unbelievable growth, 2 acquisitions in the heart of COVID-19, record-setting growth, and then bang, this global supply chain disruption rears its head, inflation rears its head, and this team is just demonstrating its resiliency and its entrepreneurial spirit of just killing it. Could it be better? Of course it could be better. I'm not saying we're perfect. We're going to make our mistakes. But it's pretty impressive. The model's working. The team is fired up. They're loving our customers. They're servicing our customers. And we've got a great, loyal customer base that's growing. So I think that's something that, the individual who asked that question is that's what I wake up every day worrying about, is executing to that North Star. That's why I'm here. I represent the owners to deliver that. And for folks that are thinking about owners, they need to make that assessment. Like, that's what we're trying to do. That's the company we're building with your capital. This is where we're going. It could be a fit. It may not be a fit, but I want you to know that so you can make a choice. And obviously we synthesize that. That's why everyone online is chatting about it. Keep saying the same damn thing over and over again. Well, I do that to rally the team. Like, I can't change the direction of the company every single year. We are off building a very large company, and we're gonna continue to pound this message and execute against this message. And I believe, we have demonstrated the ability to size the company up, and we'll continue to size the company up by executing it. So I've never been more confident. Like, we started 5 years ago. Everyone said, "Hey, you started a little too early in the public space," and arguably they were. My friends were right. We did a whopping $65,000 in 2015.
Mm-hmm.
We had, like, I don't know, a couple hundred. I think maybe 100 owners. Here we are. We got anywhere between 10 and 20,000 owners. There's right under 400 million people in North America. Like, how do we get the word out? Like, we're still an unknown story. Like, we're lucky, Deb, to have you and your team supporting us and getting this word out. And, we want to grow our owners to 100,000 owners, 200,000 owners. Like, we've got to collectively get the message out that there's a company out there, a growth company in the ESG space that's been recognized. It's not just us talking about it. We've been recognized several times that we're outpacing everyone. And I think as a group of owners, we deserve a better valuation on that. And because we are standing out as a strong growth company inside the sustainable product space. And so that's what I worry about every day. I worry about creating value for my owners, executing on that, and taking care of my people. Because no matter what curveball we get in the market, global supply chain, inflation, serving our customers, COVID, our people navigate that. That's who navigates us through this. And I think we've got a great group of people that I assure all of our owners that are on here, they wake up every day and focused on owner-centric, saying, hey, we're here to serve our owners, serve our customers, and create value. And I think that culture is we're benefiting from it during these challenging, external factors that have been thrown at good-natured and all the business communities. So that's my passionate perspective.
Well, you and your team have made some really smart decisions throughout the past 2 years, from locking in supply to the acquisitions that you've made. So I think you've demonstrated that resilience as a team, and can't predict the future, but it sounds like you have a pretty good army of people to help you deal with whatever happens. One other thing you mentioned, I know we're not going to talk about numbers today because you're reporting your Q3 results in about a week's time. But just for reference, I believe this year so far you've done about 20 million in top line at the half year mark. Is that correct?
Yeah, we've done. You can go to our website and pull the investor deck, but we're outpacing our CAGR. I think our 6-year CAGR is like 150+%. I think now we're up close to the 230 mark. So if the challenge with our investor deck that I think we can do a better job on in communicating to our owners is you have to kind of stitch together. Like I would go to the analyst reports to kind of get independent perspective, but I'll be a quick analyst. If you take all of our acquisitions, you take the 16.7 we delivered in last year, and you add the TTMs up, we're somewhere on a TTM basis somewhere between 60 and 70 million dollars. And in 2020 we did 16.7. So nothing's changed. Like I always get a lot of questions inbound, like, are you going to continue to acquire? Can you continue to grow? And I think this year just demonstrates that even though we have challenging numbers, our growth strategy is working, and we are outpacing our growth rate with larger numbers. So I probably will say the same thing and get the chatter online about saying, here he goes again. Like next year, I'm just gonna, I'm not gonna give any guidance here, but it's just like, it's gonna be the same message. Like I'll be saying, hey, guess what? Last year, here's what we're doing compared to the past. So, we just want to showcase our abilities to execute on what we say we're going to do. And I think that's a lot of value in business. Like you have to execute. And some quarters are going to be a lot better. Other quarters are going to not be so good, but the year needs to be good. Every year needs to be good. And I think that's kind of our mantra. And, we'll let our actions speak louder than all my words here. But, again, I'm pretty excited. Like I think the best is yet to come, Deb. Like we're set for a really, really good upcoming year. Like I think we're positioned quite well.
I think the company's in as good a position as I've ever seen it. You've got a strong balance sheet, you've got lots of growth. You've got 3 acquisitions in the last 2 years under your belt. I guess the question I have is, so you're trading at about 2.5 times sales, where some of your peers are up at like 6-7 times. How do you close that gap? What do you think needs to happen? Is it marketing initiatives? Is it just more performance? What do you think?
Yeah, well, obviously we got to keep performing, but I also think we have a huge opportunity. Like I always say, there's room for us to improve, and we definitely need to increase our distribution and our awareness of our company. Like we're working really hard, and we're investing money to further broaden our distribution. Although we're excited at the fact that we're kind of in that 10 to 20,000 owners. There's still a lot of people out in Canada and the US that we want to bring in as owners. So I think distribution and awareness of our company is our biggest challenge. And no, it doesn't take away, we've got to deliver. I get that. But we can continue to execute like crazy if we don't get good-natured distribution out there and awareness to give, whether it's retail or individual or institution. Like we want that really good balance. we got great coverage too, right? So I think with some really good analysts. So I think we just got to keep working on getting the word out. I think that's our biggest challenge.
You have 4 analysts covering you now, or is it 5?
I believe we're right at 5. Yeah, there's one US analyst too.
And then I guess just to end things off, because I've monopolized enough of your time, can you list some of the upcoming catalysts for anyone that's listening?
Well, I think, again, I hope I don't drive more chatter online on this, but I think it's going to be a little bit of the same story, right? Which is going to be, this US food producer. I think it's a catalytic announcement. So we want to continue to drive organic acquisitions and growth through announcements of not just big, large US national accounts, but we want to demonstrate and give our owners a flavor of the customers that we're acquiring out there and demonstrate our ability to continue to grow our customer base. And again, it's going to be the same thing with some acquisitions, right? So I think it's going to be the same catalyst moving forward. Maybe they'll be a little bit bigger, maybe there'll be more numbers, but it's really going to be those same catalysts is what I see in the near term, and also continuing in the long term, which I view kind of in the 24-month horizon. I don't see those type of catalysts changing.
Okay. Well, I think we've run out of time and questions. Anything that we didn't cover today, Paul, that you wanted to touch on?
No, not at all. I think this was, appreciate all the inbound questions, and thank you for arranging this. You've been a great partner of ours in getting our story out, and it's great to see you, and appreciate all your time.
It's been a pleasure, as always. Again, if anyone's new to the story, feel free to check out the most recent webinar that Paul did, or anything that's on the Adelaide Capital YouTube channel. If you have any follow-up questions, feel free to reach out. I'll get those answered for you. Thanks to everyone that participated, and thanks, Paul and Spence, for your time.
Thank
Have a
you.
good afternoon.